What if you could apply the same strategies that built a $14 billion empire without needing to be a billionaire yourself? Jim Pattison launched his business career with one used car dealership on Cambie Street in Vancouver in the 1960s. Now fast forward to today, the Jim Pattison Group has dozens of industries, employs thousands of people across Canada, but it wasn't just the hustle that got him there. What most people don't see is the smart financial structure behind it all. The holding companies, reinvesting profit, corporate-owned insurance, strategic tax planning. This allowed his wealth to grow quietly and efficiently behind the scenes. And the good news, these are the same tools that we use every day with incorporated professionals and incorporated business owners here at Safe Pacific. Hi, my name's Laurent Munier, and I'm a partner and I'm an advisor here at Safe Pacific Financial. And in this video, we're going to show you how you can borrow from Jimmy Pattison's financial playbook and apply it to your own business. Whether you're earning $150,000 or whether you're up at the $14 billion level, let's explore how to build and protect your real wealth the Canadian business owner's way. The Jim Pattison Blueprint. How to structure your corporation for long-term wealth in Canada. So Jim Pattison didn't become one of Canada's wealthiest entrepreneurs by chance. It wasn't just the hard work that built his $14 billion empire, it was the smart structure. Pattison understood early that if you want your business to last for generations, you can't just focus on the income. You need to focus on how the income is earned, how it's protected, how it's reinvested, and eventually, how do you pass it on? He built a corporate structure that allowed him to do a few things: maintain full control of his companies, reinvest the retained earnings with tax efficiency, minimize exposure to personal and corporate taxes, and protect his assets from creditors and downturns, and pass on his empire without triggering the massive estate tax and having so much CRA interference. One of the most overlooked components of the strategy is a privately held life insurance policy inside the corporate structure. And so this allowed him to grow capital tax sheltered. It allowed him to access liquidity through policy loans and ensure a smooth, tax-free transition of wealth to his future generations, all while insulating the business from economic shock. So he avoided unnecessary debt, didn't rely on outside investors, and he used holding companies to separate the risk and the opportunity. And this foundation gave him the flexibility to weather economic cycles and to acquire businesses at the right time when others were forced to sell. And here's the best part. You don't need to be a billionaire to use these same tools. If you're an incorporated Canadian business owner and you're earning $150,000 per year sitting on retained earnings inside your corporation, you have access to the same core wealth building strategies that fueled Jim Pattison's success. Things that we talk about a lot on this channel, right? Using a holding company to invest and to protect your assets. Funding a participating whole life insurance policy so you can have that tax-deferred growth inside and that tax-free legacy at the end. Accessing your policy loans or collateral loans against that policy without triggering capital gains. And designing your business structure to align with retirement, to align with succession, and to align with your estate goals. And now let me tell you about the secret of using life insurance for growth in Canada. When most Canadians think about insurance, they think about protection, coverage that pays out when you pass away. And of course, that's super important. But what high net worth entrepreneurs like Jim Pattison understand is that permanent life insurance, specifically a participating whole life insurance policy, can be a powerful tool for growing wealth while you're still alive. So this strategy isn't just about leaving money behind, it's about creating a living asset that builds value inside the corporation. It grows tax sheltered and it can be accessed when you're alive with no impact on your investment portfolio or your tax bill. And so here's how business owners across Canada can use it to create long-term financial leverage. So number one is you want to allocate your corporate capital strategically. So instead of letting your retained earnings sit idle in the holding company or the operating company, and there your money might be exposed to high corporate tax or passive income tax or even legal liabilities. You direct a portion of those funds into these special types of participating whole life insurance that's owned by the corporation. Secondly, you can grow the tax sheltered cash value. So once the policy's in place, it immediately begins to create a cash value while also earning an annual tax deferred dividend that's based on the insurance company's performance. And then this growth is stable, it's predictable, and it's not tied to the stock market volatility. So it makes it a great long-term conservative wealth building asset. And then third, you want to access liquidity without triggering taxes. So one of the most powerful features of a participating policy is the ability to access the cash value through policy loans or collateral loans. Now, these loans are not considered taxable income, and they don't show up on your credit report, and they don't require you to sell other investments and trigger other capital gains taxes. You can get access to capital when you need it for reinvestment, for retirement, for emergencies, while the policy continues to grow in the background automatically. Fourth, it allows you to pass on wealth tax-free. So when that insured person dies, the full death benefit gets paid out to the corporation, depending on how it's set up, or it can get paid out personally, depending on how the ownership is set up. And then this creates, in the corporation, it'll create a capital dividend account, and it can flow the majority, usually, of this death benefit tax-free to the beneficiaries of that company. And so this can be a great asset for your estate to receive money tax-free. This is how some of the wealthiest business owners in Canada quietly to build, protect, and transfer millions of dollars without losing half of their money to taxes or exposing themselves to market volatility that they don't control. It's conservative, it's CRA compliant, and it's proven over decades. And at Safe Pacific, this is what we specialize in. We specialize in designing custom corporate-owned life insurance policies for professionals, for incorporated families. And whether you're just starting to build your retained earnings now or you're already managing a substantial portfolio, we can help you to structure the plan for maximum tax efficiency, growth, and legacy. Now, what does this, why? What does this solve? What does this solve for Canadian business owners? One of the keys to Jim Pattison's long-term success wasn't just the business acumen, it was his ability to retain control over capital. He didn't rely on public markets or outside investors or bank financing to grow the empire. Instead, he built the financial resilience by maintaining liquidity and tax-efficient structures that gave him the freedom to seize opportunities when they appeared. So as a Canadian business owner, you can follow the same blueprint and you can have these same tools for yourself. We help incorporated professionals and entrepreneurs to implement this type of corporately owned participating whole life insurance policy. And it goes beyond the basic protection. Of course, you need the protection, but these policies also offer a multi-dimensional solution to some of the biggest financial challenges that a business owner is going to face. Here's some of these problems and how we can solve those. So number one, it puts corporate cash to work. If you've got retained earnings that are building up inside the holding company or your operating company, leaving it in a low-interest checking account is not only inefficient, it could be costing you thousands of dollars in missed growth and in tax drag. A whole life policy allows you to redirect that capital into a stable, tax-sheltered asset that compounds over time. It also helps you to reduce tax exposure on passive investment income. So this is a big one. Investment income inside the corporation is taxed at some of the highest rates in Canada, usually, depending on your province, over 50%. So if your passive income exceeds $50,000 a year, you will also start losing your small business deduction. And this could trigger even more tax for your active operating business. So the whole life insurance, by putting the money in there, it avoids this altogether because the insurance policy is tax exempt and the growth doesn't count towards the passive income rule thresholds. Another thing too is that you can access capital without triggering tax. So if you need liquidity or you need money for your business opportunities or your real estate or retirement income or other investments, you can access your policy's cash value through different types of loans, so policy loans or collateral loans. Depending on how you set these things up, policy loans can be mostly tax-free. They do become taxable once your loan is higher than the adjusted cost base. But again, you're working with professionals like us. We wouldn't let you get into a bad situation like that. And then you have collateral loans, which are generally tax-free all the time. And you can access these without having to sell other assets. So you can have the money growing, you can use the money, but you don't have to sell it. This is one of the most powerful ways to get liquidity and to extract cash from the corporation without incurring capital gains or dividend tax or interest tax or income tax, right? So you can have the money growing and you can still use it while it's growing. This also helps you to protect your wealth from market risk and also legal exposure. So unlike traditional investments, the cash value inside a participating whole life policy never goes down, even during market crashes. So the word that you want to know here is called vested. Any money that hits that account is immediately vested, which means that it's yours and it's guaranteed and it'll never go down unless you take it out. but the insurance policy is never going to make it go down. And then because the policy is corporately owned, it can also provide a layer, usually in your holding company, it'll provide a layer of asset protection from potential creditors or lawsuits. This will also allow you to leave a tax-free legacy. So when the life insured passes away, that death benefit gets paid to the corporation. And here we're talking about a corporate policy. And then this credits your capital dividend account or your CDA. And depending on how long you've had the policy, almost all of the death benefit could credit the capital dividend account. And this will allow your family to withdraw, or whoever the corporation beneficiaries are, to withdraw the funds completely tax-free. And also skips the probate. It skips the CRA. We do stay compliant with them, but we don't need to talk to them. And then this is one of the most efficient estate transfer tools that's available to regular people in Canada, whether you're a business owner or whether you're just regular people. Now, you don't need to be a billionaire. You just need to think like one, right? So many Canadian business owners will hear names like Jim Pattison and they assume that the wealth strategies that he's using are only for billionaires. But really, you don't need billions to apply the same smart financial thinking. What you do need, you need a profitable corporation, you need a long-term vision, and you need the right strategy that's tailored for your situation. So again, this is what we do. We work with successful Canadian professionals, with people like you who are watching this video right now, who want to do more than just earn a good income. You want to build real wealth over time. You want to protect what you worked for and then pass it on to usually kids or the husband, wife, spouse. These tools that billionaires use, like these participating whole life policies, the corporate structure of operating company, holding company, potentially a trust, and the tax-efficient cash flow planning, these are available to anyone who's incorporated and who is financially strategic or working with a good team. And let me give you a couple examples here. These are just a few examples of how our clients are putting these concepts into action. So there's a dentist. So the dentist that's financing his practice expansion. So now we've helped this dentist. He's working across Canada right now, and he's using the cash value inside his corporate-owned life insurance policy to finance the purchase of new dental practices. He's also used it to acquire equipment, and he's also used it to expand into another location without having to liquidate other investments or without having to take on outside loans and going through that whole process. Another one that we've done is with a tech entrepreneur. So he was extracting capital tax efficiently is kind of what I'll call this section. So growing the business is obviously, it's one thing, but getting the retained earnings out without a massive tax hit is another thing. So we've showed these Canadian tech founders how to reinvest the surplus cash through the holding company and then access the capital via tax-free collateral loans so that you could avoid capital gains or dividend tax. Eventually, there's going to be some tax paid if they want to pay themselves personally and, use that money to go to a restaurant or whatever. But in these guys' case, they were able to reinvest the corporate money through corporations to be able to basically just grow themselves. Here's another one too, is another business owner that's creating, here the value was in the intergenerational wealth transfer. So they wanted to leave more money and less tax liability. So we designed a multi-generational wealth transfer strategy that uses this type of insurance that can pay out the tax-free benefit, creates the capital dividend account in a corporation, and then through the right corporate structure, the family's the beneficiaries of the corporation, and then they can receive that money tax-free from the corporation when the father passes. And then here's another one too, is just regular families who want money to pass while avoiding probate and while avoiding big estate taxes. So there's many high-income Canadians don't really realize how much capital gains tax can erode your estate when you pass away, especially if you own things like real estate or you own shares like stocks or you own non-registered investments. So using a life insurance that has this CDA capability when it pays out can provide a huge amount of liquidity to the estate or to the family or to the beneficiaries of that corporation that can then cover those final taxes. Because when you die in Canada, there's what's called a deemed disposition on death. So the CRA assumes that, the day before you died, you sold everything that you own, and now the taxes on everything is payable. So this tax on death in Canada is probably going to be most people's largest tax bill in their entire life. How do you pay it? And not even how you pay it, you have to pay this now. Well, not you, you're dead, but your family's going to have to pay this like now. They have to pay it at next tax season in April. So they need the money, right? And again, the insurance helps to create that money to then give to the CRA, and then you keep the rest. Now, these aren't just only strategies for billionaires. These are smart financial moves that any incorporated Canadian professional can make with the right plan. Now, if this is something that sounds good for you, and if you're ready to build like Mr. Jimmy Pattison, and if you're sitting on retained earnings in the corporation, and if you are frustrated with the amount of tax you pay, and if you're wondering how to grow your wealth conservatively without having to gamble in the stock market and like watch your market go up and down all the time, let's talk. Super easy to get a hold of us, and we're very happy to chat with you. Go to our website. It's called safepacific.com. When you're on there, there's lots of buttons that you can click. You can either fill out a form and send us a message, or you can book directly straight into our calendar, and we'll set up a time to meet. We work across Canada. I would say 97% of our consultations are via Zoom, so we can meet you at your time, your place, wherever you are. And we're very happy to meet. So it's safepacific.com. There's lots of get in touch buttons all over the website that you can just click and set up at the time. Our friend Jimmy Pattison, he built this empire by taking control of the money, by using these certain tools that are available to all Canadians and to all Canadian business owners. And you can do the same thing, right? So get in touch with us. It's on the website, safepacific.com. And if today's video gave you any value, please do me a huge favor and click a button. That's the like button, the subscribe button, the share button, the notification bell if you're on YouTube. And if you know another entrepreneur who needs to know this, like most people don't know that you can do this. So please share this with them. There's not a lot of us around, and so it's tough to find other business owners and entrepreneurs. Yeah, that's it for me today. I'll see you next time.